changes are coming for UK car owners. Are you driving an electric vehicle, EV, or thinking of buying one? Well, get ready because new car tax rules in the UK are shaking things up, and not in a good way. Let's break down what's happening, how it affects you, and why some say the honeymoon for EVs is officially over. Before we dive into the changes, let's first understand what Vehicle Excise Duty, VED, is. Also known as road tax or car tax, VED is a tax levied on most vehicles driven on UK roads. It is calculated based on a car's CO2 emissions and is paid annually. For years, EV owners have enjoyed an exemption from VED, making electric cars cheaper to own. But that's about to change. As of April 1, 2025, significant changes to the UK's Vehicle Excise Duty, VED, have been implemented, impacting both electric and traditional vehicle owners. These adjustments aim to create a more equitable motoring tax system, but have sparked debates about their potential effects on consumer behaviour and the automotive market. Previously exempt, EVs registered on or after April 1, 2025, are now subject to VED. Owners will pay £10 in the first year and £195 annually from the second year onward. EVs with a list price exceeding £40,000 incur an additional expensive car supplement of £425 per year, applied from the second to sixth year of ownership. This means affected EV owners could pay up to £620 annually during this period. Cars emitting more than 255 grams per kilometre of CO2 will see their first-year VED double, adding an extra £2,745 annually, leading to a total cost of approximately £5,490. Please take a moment to like, subscribe, and share this video if you find it helpful. Vehicles with CO2 emissions between 1 and 50 grams per kilometre will experience a first-year VED increase from £10 to £110, while those in the 51 to 75 grams per kilometre range will see a rise from £30 to £130. The introduction of these taxes may deter potential electric vehicle buyers, especially given the higher upfront costs associated with electric vehicles. Critics argue that the £40,000 threshold for the luxury car tax is outdated, as many modest family electric vehicles exceed this price point. Consumer hesitancy is becoming increasingly evident as we witness a decline in electric vehicle sales. There has been a notable decrease in EV sales, with a 17.1% drop observed in November compared to the previous year, despite an overall increase in car sales during the same period. Automakers are responding with significant discounts to stimulate demand, with some EV models being offered at reductions nearing £12,000. The recent VED changes represent a pivotal shift in the UK's approach to vehicle taxation, particularly concerning electric vehicles. While intended to standardise tax contributions across all vehicle types, these measures may influence consumer decisions and pose challenges for the broader adoption of EVs. Prospective buyers should carefully assess the financial implications of these tax adjustments when considering their vehicle options. So, what does this all mean for you? 1. EVs just became more expensive to own. One of the biggest selling points of EVs was the low running costs. Now, with higher taxes and rising electricity prices, the financial advantage is shrinking. 1. Petrol and diesel owners get hit harder. If you drive a high-emission car, your tax is going up significantly. The government is clearly pushing people towards greener alternatives. 1. Car buyers may rethink their choices. With EV tax breaks disappearing, some buyers may hold off on purchasing an electric vehicle. In fact, EV sales have already started to decline by 17.1% in recent months. Why the change? The UK government says this move is about fairness, making sure all drivers contribute to road maintenance and public spending, regardless of their vehicle type. However, critics argue that this could slow down the transition to electric vehicles and make them less appealing. What should you do? 1. If you already own an EV, prepare for increased costs in 2025. 1. If you're thinking about buying one, act before the tax kicks in to save money. 3. For petrol and diesel owners, consider fuel-efficient options to minimize tax hikes. What do you think about these new changes? Is this a fair move or a setback for electric cars? Drop your thoughts in the comments below. If you found this video helpful, smash that like button, share it with your friends, and hit that subscribe button with the notification bell on so you never miss the latest updates on trending topics. Thanks for watching, and see you in the next video.